The gentleman from Kentucky, Mr. Barr, is recognized for 5 minutes.
Thank you, Madam Chairwoman. And many of my Democrat colleagues today have highlighted instances where private equity-backed companies have restructured the business model or cut jobs or filed for bankruptcy. And while it's true that successful buyouts may include cost-cutting, there are plenty of success stories that demonstrate how small businesses prosper through private investment and benefit from strategic insight that private funds can offer. Mr. Maloney, I was impressed with your testimony that private equity invested $685 billion in more than 4,700 businesses across the United States in 2018, and that 94% of PE investments are successful. One example of this success is Big Ass Fans, headquartered in my district in Lexington, Kentucky. As the colorful name suggests, this company makes, among other things, very large fans for commercial and residential facilities. This private equity-backed business has grown at an astounding annual rate of 30%. Since their private equity investment, Big Ass Fans has added nearly 200 jobs, developed and introduced new products, and increased their distribution channels. They have international offices in Australia, Canada, Malaysia, and Singapore, sell products in more than 170 countries, and employ over 700 people, 550 of whom work in my district in Kentucky. Their CEO, Lenny Rhodes, has told me that the stability provided by their private equity backers allows them to confidently make investments in their workforce, facilities, and technology because they have a partner with a shared goal of success. Big Ass Fans is innovating and pioneering the industry happily in the heart of central Kentucky and thriving no longer just as a fast-growing small company, but as the trusted producer on a global scale. This is a shining example right in my backyard of the direct impact private investment can have on job creation, technological innovation, and community development. Now, everyone here is sympathetic to Ms. De La Rosa's story and what happened to her. Everyone here is sympathetic to the other Toys R Us employees. And bankruptcies are unfortunate, and PE-backed companies are susceptible to market conditions just like other companies. But Mr. Maloney, the question is, what was a larger impact on Toys R Us's bankruptcy? Was it the private equity firms, or was it the competitive pressures of Amazon?
Congressman, thank you for that question. And while I don't know the particulars, but what I can tell you is that at the time, you saw much different market forces. People were buying a lot more online. And, you know, as you know, there were other toy manufacturers and toy stores that went out of business. Some of them are backed by private equity. Some of them weren't backed by private equity.
Let me ask you the question this way. Did private equity forestall bankruptcy of Toys R Us, or did it cause it?
Well, during the time of private equity's ownership of Toys R Us, they actually expanded the number of stores. It's just unfortunate that it ended up this way, and that's largely because of market forces, as you say.
Well, again, kind of a follow-up on Mr. Stiver's question. Do private equity firms generally make more money investing in companies that go bankrupt or in companies that are successful?
We make more money for our investors when we are successful and we can exit.
Well, that makes a lot of sense because we see that at Big Ass Fans in Lexington, Kentucky. And I want to add that the private equity backers of Big Ass Fans is a firm that touts as one of its managers former Obama Treasury Secretary Jack Lew. And I'm just glad to see Democrats so actively involved in the provision of equity capital like Mr. Lew that has created very positive difference in Lexington, Kentucky. Glad to see that this is a bipartisan issue. Real quick on leverage lending. This hearing is obviously about private funds, and private credit deserves attention as well. Some of my Democrat colleagues have suggested that leverage lending is systemically risky. I've noted this before. It's important to make the distinction between credit risk, which is simply the cost of doing business in the credit economy, and systemic risk. In September, before this committee, SEC Chairman Clayton testified that he does not believe that leverage lending poses a systemic threat. Mr. Maloney, do you agree with the SEC Chairman that leverage lending does not pose a systemic risk to our economy?
Yes, Congressman, we agree with the regulators on that approach.
Yeah, and final question, Mr. Palmer, can you elaborate on the stability that private funds can provide to the economy, especially in periods of distress?
Sure. I'll give you a real-world example. When the financial crisis happened, banks had to pull their loans on small businesses. Private equity funds stayed in them and kept those businesses alive. If you were backed by private equity, you were more likely to survive that downturn than if you had just had normal bank loans.
Thanks. I yield back.